By the end of this video you will understand exactly how triangles form, what they mean, and how to trade them like a pro. Let's jump straight in. Alright traders, welcome back to the channel. Today we are going to break down one of the most important pattern families in technical analysis, triangles. And in this single video, I'm going to walk you through all four major triangles patterns: symmetrical, descending, ascending, and expanding. Let's start with the symmetrical triangle. This pattern forms when the market prints higher lows and lower highs at the same time. Buyers push up from below, sellers push down from above, and the price gets squeezed into a tighter and tighter range. The internal nature of this pattern is neutral. Neither side is fully in control, but the location of the triangle inside the trend tells you everything about what comes next. For example, during Bitcoin's 2023 rally, BTC formed a clean symmetrical triangle around the $27,000 zone. It wasn't sitting under the major resistance. So, the patterns act as a continuation and price broke upward. Now here's a rule you must tattoo in your brain. Never trade inside the final 1/3 of a triangle. That zone is pure chaos. Fake outs everywhere. Fake outs everywhere, stop hunts everywhere, just wait for breakout. Symmetrical triangles don't need breakout to exist. If you can draw the two trend line, the pattern is already there. But for trading, you need a valid breakout. A valid breakout means a real price breakout, not a time breakout. If price simply drifts outside the triangles without momentum, the pattern is no longer a triangle. It's probably turning into a range. So, how do we trade it? If the upper trend line breaks, I enter long. If the lower trend line breaks, I enter short. A stop loss goes under the previous swing low or under the lower trend line. The target is usually 44% of the first leg that created the triangle. Once that target hits, I know the pattern is active and the trend is continuing. Now let's move to the descending triangle. This one is bearish by nature. It forms when the market prints lower highs and a flat support level. Sellers get stronger every round. Buyers only defend one level. And eventually the level gives up. A real example, in 2022, Solana formed a perfect descending triangle around the $30 zone. Support held multiple times, but sellers kept stepping down. Once support broke, sold flushed straight toward $12. Classic descending triangles behavior. If this pattern forms in a downtrend, it usually continues the trend. If it forms at the top of an uptrend, it often signals a reversal. There are two ways to trade it. Method 1. Early entry. Short near the upper trend line. A stop loss above the previous high. Method 2. Safe entry. Wait for the breakdown. Wait for the retest. Then enter short. The target is usually 25% of the first leg. To confirm the pattern, I clone the descending trend line and place it on the first leg. If price closes below that cloned line, the pattern is almost certainly not failing. This is something I learned from years of chart watching. Now, let's move to ascending triangles. This one is the bullish version. It forms when the market prints a flat resistance on top and higher lows from below. Every dip gets bought up stronger than the last one. Buyers are gaining control even if they haven't broken the ceiling yet. If this pattern forms during an uptrend, it usually continues the trend. If it forms at the end of downtrend, it can signal a reversal. A real example, in 2021, Ethereum formed a clean ascending triangle around the $2,000 zone. Volume dries up right before the breakout, and once ETH broke above resistance, it exploded toward 3000. Volume should decrease from the start of the triangle to the breakout. When volume gets extremely low, the market is preparing for a strong move. Trading it is simple. Break above the upper trend line, you get long, stop loss under the previous low or under the lower trend line, or wait for the pullback and enter there. The first target is 25% of the initial leg. If the ascending triangle forms at the bottom of a downtrend and the first target hits, that's a strong sign a new bullish trend is starting. But remember, when trading against the main trend, reduce your risk. Now let's talk about the expanding triangle. This one is wild. The two trend line moves away from each other. Higher highs, lower lows, volatility everywhere. This pattern tells us the market is unstable, and neither side has full control. If it forms near the top of the market, it's usually bearish. If it forms near the bottom, it's usually bullish. A real example, in 2020, XRP printed a massive expanding triangle on the 4-hour chart. The swings kept getting wider. Once the lower trend line finally broke, XRP dumped nearly 15% in a single move. Do not trade support and resistance inside an expanding triangle. You will get stopped out repeatedly. Instead, trade directly off the trend line. Buy the lower trend line, sell the upper trend line. Repeat until the real breakout happens. This pattern doesn't have a fixed target, but after the breakout, expect a strong move in the same direction. The bigger the triangle, the bigger the explosion. Volume in expanding triangles doesn't follow strict rules. Because volatility is high, volume usually stays elevated. But during the breakout, volume often spikes even more. One more note about ascending triangles. On the breakout, volume should increase. On the pullback, volume should decrease. If volume doesn't drop during the pullback, the breakout might be fake. Make sure you have watched all the triangles lessons. All of the patterns connect together, and triangles are the foundation. If you are new to the channel, check the technical analysis playlist and start from the beginning. People pay thousands of dollars for this stuff, but I'm giving it to you for free. Thanks for investing in your education. Let's keep growing together.